James, two of the biggest takeovers since the financial crisis announced in 10 months. How is this going to shape the Morgan Stanley of 2030 in the next 10 years?
Well, one thing is, Sonali, I won't be here to answer that question, so I'm doing it on behalf of the people who will succeed me. But listen, this has been a 10-year strategy to take what is an extraordinary investment bank and trading business, clean that up in terms of the risk management of that business, take away the prop trading, use that capital more effectively, and it's doing unbelievably well. And then we had to pivot to build up the wealth management business, which we did first through Smith Barney, and then Solium, and then E-Trade, which gave us the digital platform. And now we're doing it on the asset management side, which we did with Mesa West a couple of years ago, very small boutique on the west coast of the US, and now excitingly with Eaton Vance. So we think for 2030 specifically, you'll find a very stable, faster growing, very fee-based institution, well-capitalized, strong liquidity.
Now, James, explain to me the strategy here. Now, are you making Morgan Stanley for the masses? Are you trying to be all things to everybody now that you've added this large brokerage and this massive asset manager?
Well, no, not at all. I mean, we've done many deals since I've been CEO. We sold oil storage and oil transportation businesses, Heidemeyer and Transmontane. We sold mortgage servicing businesses, Saxon. We sold European private banks. We sold a business called Quilter in the UK, Azores in Spain, and so on and so on. So we've been reshaping the portfolio. This is about originating, distributing, and managing capital for individuals, institutions, and governments around the world. That's what we do. So being in the asset management space, in the wealth management space, in the trading space, the underwriting space is all consistent. It's all part of that process of originating, managing, distributing capital. So frankly, I think we're a more focused company, certainly than most of the peer set that we deal with.
Now, James, this has been an expensive deal also, but at the end of the day, it's what this deal will deliver to shareholders in the future. It all comes down to profit, about margin. How do you explain the economics to them in the longer term?
Well, I've met a lot of people who want to buy great companies cheaply, and they end up not buying anything. And hopefully you don't buy underperforming companies with a lot of money. If you're going to buy a great asset, listen, Eaton Vance has been around for over 90 years. World-class, huge talent, perfectly complementary businesses. There'll be very little dislocation, high growth, some great businesses with Parametrics in particular has been growing very fast. Their traditional asset management space, the Calvert funds in sustainability. So this was a no-brainer. We paid $4 for it. I make no bones about that. But that's what you have to do if you want to buy high-quality businesses. And they came to us. They wanted to be part of the Morgan Stanley business, and our cultures align. Listen, it's mildly accretive day one. It used up about 100 basis points of CET1, which is our core regulatory capital ratio, but we've accreted about 100 basis points this year. So we're sort of back to neutral. So it's going to be a terrific deal over the long run. I'm not worried about the financials at all.
So it makes the asset manager pretty big here. It makes it above 1.2 trillion at this point. It's still a fraction of where BlackRock and Vanguard and even where JP Morgan is. How do you compete with those rivals at this point?
Well, they're completely different businesses. I mean, Vanguard and BlackRock are largely index or exchange rated businesses. We're not trying to be the biggest. We're just trying to do, Sonali, I've often said, you don't do strategy through envy. That's how you make mistakes. You do strategy based upon what works and what's important to your institution. To have a $1.2 trillion asset management company from where we were 10 years ago is unbelievable. I don't care that there are others who are bigger. That's not the point. The point is, are we generating the returns we need for our shareholders? And are we providing the clients with the opportunity that they need for the best product out there? And through this deal between our asset management business and Eaton Vance, it is absolutely happening.
James, how much does the fee pressure across the industry worry you?
I mean, not greatly. Obviously, we take that into account, but we've been living in a world of some fee compression, and that's where scale clearly is your friend. But we're not at the index end of the fee compression where it's effectively close to zero. So I'm not particularly worried about that.
Now, we talked about how this made you bigger in asset management, but you also got much bigger in wealth management.
Sure.
What is your plan here to compete on a global scale? We know that you're massive in the US, but are you going after Credit Suisse when it comes to that global market?
Well, I don't, again, I don't focus on competitors. I don't do anything from envy. I don't really care what others are doing. I care what's right for us. Being very big in the US is actually a great business model. We actually sold our private banking business in Europe. So we've exited parts of the world where we didn't have the scale. Our objective, Sonali, is not to be in every market. It's to do the job that our clients expect us to do and generate a good return for our shareholders with employees who are proud to work here. If we fulfill those objectives, whether we're in my old country of Australia, whether in continental Europe, whether in the UK, Canada, Brazil, that's less important. It's, are we meeting the core objectives of our firm?
Now, come next year, you're going to be adding a significant workforce in a weaker economy than we've had the last couple of years. Will this require job cuts as you add more people to the team?
Well, firstly, recall in February this year, we came out, and I think we're the first company to do it, to guarantee all of our employees' job for the year, and we'll stick to that guarantee. So the firm is doing well. We had an extremely strong first half of the year on the back of a record next half of the year. There'll be some consolidation, but this deal is not about job cuts. It's not about massive synergies where you're taking expenses out. This is a far more interesting acquisition and partnership we have with them because of the complementary nature of the businesses. They're in businesses we're not in, and vice versa. They have distribution in the US we don't have. We have distribution internationally they don't have.
Now, James, I want to steer your thoughts on the economy here. When you look around you, what still troubles you about what's going on about the economy?
Well, it's, we haven't got a vaccine for COVID. When you don't have a vaccine for COVID, people aren't going to return to their place of work. When they don't do that, all the small businesses that are dependent upon that can't survive. I mean, I'm here in Times Square in Manhattan, and there are lots of businesses around me that haven't reopened. That's where the pain is. That's why we need continued fiscal support from this government and other governments around the world. It's going to be a haul. We've got credit issues that are clearly in the economy and coming. But it's not as bad as people thought. I mean, I was asked months ago whether we had bottomed in terms of COVID, and I said yes. That wasn't a unanimous view at all. But the economy is slowly recovering, and I think it'll keep recovering, but it needs support.
So when you look at the fiscal stimulus that's needed, if you could target one or two areas that you think it needs it most, where would those places be? Well,
it's consumer and small business. I mean, that's the obvious areas. There are certain industries, obviously, that have been under enormous stress, but I go back to if you've got consumers who are paying their bills, who have some money for consumption, some money for savings, everything starts working. When that unravels, then you've got a whole different level of problems.
And with all of these small businesses shutting down at this period of time, too, how much are you worried about this K-shaped, unequal recovery with so many smaller businesses suffering as the credit markets have been open to the bigger ones?
Well, again, I think that's where the fiscal support comes in. That's where the various stimulus packages from the government are helping the small business, and they needed to continue. We're not out of the woods yet, Sonali. So we need continued monetary and fiscal support.